Hello and welcome to the latest energy market update. Energy prices have risen this week, so let's have a look at what's been happening in some more detail. Oil prices rose on Monday as speculation increased over the possibility that producers may take action by means of a production freeze in order to bring the market back into balance. On Tuesday, the Russian energy minister suggested that they were open to cooperating to stabilise the markets. This provided further upward pressure to prices, and front-month Brent closed just shy of $1 per barrel down day. Mixed US economic reports led to the dollar weakening, which also contributed to the gains. The weekly EIA report released on Wednesday showed a decline in stocks of 2.5 million barrels. Whilst inventories remain at historically high levels, markets had expected to see an increase in stocks. Gains were curbed thanks to a slight increase in the pound relative to the euro. Prices remained bullish for most of Thursday's session, although prices did begin to ease later in the afternoon. Saudi Arabia announced record high exports for June, a 3-month high, which points to an increase in output before a production freeze talks. Despite prices easing in the afternoon, Brent still closed over $50 per barrel, up $3.61 per barrel compared to last Friday. The system was heavily oversupplied on Monday morning as Norwegian imports increased and exports to the continent decreased. However, by the afternoon the system moved into balance following an outage at Bacton Seal. Prompt prices eased in response to comfortable system dynamics, whilst near-term and longer-dated contracts rose in line with higher oil and a weak pound. Oil contracts rose throughout Tuesday and Wednesday, pressured higher by a tight system, as well as rising oil and ongoing weakness of sterling. There was some relief for prices on Thursday. Import capacity is expected to increase over the coming days as infrastructure maintenance in the North Sea draws to an end. Prompt prices eased as a result, whilst near-term and longer-dated contracts softened, thanks to a slight recovery in the pound. Last night, near-term contracts closed lower than last Friday, whilst with September 16 losing 1.35 pence per therm, whilst longer-dated contracts gained between 0.5 and a penny a therm. Solar and wind generation increased on Monday, which pressured prompt prices lower, as renewable sources are less expensive than gas-fired generation. Near-term contracts moved lower in line with the prompt, whilst longer-dated contracts posted gains in line with the rise in gas prices. Oil contracts rose on Tuesday, and wind generation reduced and was only providing around 3% to the mix, whilst gas-fired generation provided around 53%. Prices then edged higher on Wednesday in line with their corresponding gas counterparts. Despite softening gas prices on Thursday, power prices closed higher day on day, taking their direction from oil and carbon. Last night, oil contracts closed higher compared to last Friday. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching, and we'll see you next week.